Well, let's look at this. So I want to document our balancing spreadsheet. So we've got a number of open item reports that we're going to balance to general ledger accounts. So we've established a spreadsheet, and I just want to briefly go through what that process is going to look like. So for example, in this spreadsheet, I've got dates listed down the left-hand side of the screen. And then along the spreadsheet, I have the general ledger account that I want to balance, and next to that, then the Eagle account, the open item report that supports that figure. So for example, and we've got some accounts where we've got some variances, and what we're going to do is track those variances for a while to verify that they're stable. It'll help us understand if something goes, variance changes, and we'll know we need to look at something on that date. But anyway, we start out with accounts payable in column B. You'll notice we indicate accounts payable in the account number 2110, and we're going to grab the figure there from the general ledger. So Mary, if you would, go ahead and pull up Eagle Browser, and in our favorite section under GL balancing, we've got GL account detail GINQ. Go ahead and click on that to launch that program, and I think that may be on your taskbar currently.
I think it was.
Okay, yep, now we got it. Okay, so maximize that. And an account number, let's go ahead and put in the account number in question, 2110. And then at the ending date, let's have the ending date in question, 06/18/13, and then press the enter key to refresh this. And we're only interested in our ending balance, so we record that number. 153, 421, whatever the number is, 425.40, and then we're going to bring that number over into our spreadsheet. So we'll look at that, and we've got that. Then in our next column, next to that, we've got the accounts payable open item report. So Mary, let's go back over to the general ledger, or to the Eagle Browser, and minimize this, if you would.
Oops.
That's fine, minimize this. And over in our favorite section, immediately below there, we have our spooler, a link to our spooler. So click on spooler, and up in the top left-hand corner at report, let's have RAOI. So we're recording the accounts payable open item reports daily, and the comment on the report that we want to use indicates that it's to be balanced to the account number in question. And if you would, just double click on the report dated the 18th, and then click on the go to button, and then let's go down to the bottom of this thing, page 999. Down in the lower left hand corner on our grand total is our figure in question, 165 through 431.45. And so again, as we minimize that and maximize the spreadsheet, we're going to record that over back to the spreadsheet. So just continuing that through, the next column will record a difference, and then the column E records the change in the difference. So what we would anticipate to see is we know we've got a variance, but we don't want to see that change. Now, we've been making some modifications, so we've got an adjustment, so we've got a little change there. We just need to move forward and see what we get. The same concept applies as we carry on. So we've got accounts receivable next, account 1120. We're going to get the general ledger, and then we're going to look at the RAG, and then the difference is there. And then we're recording the change. In this case, between the 16th and the 19th, there was no, or 18th and 19th, there was no change in the variance. And then if we scooch over another little bit, we will get the variance between the RATL report, which is our temporary vouchers, and our accrued accounts payable account, which is 2112. And so notice we cross-reference both in the reports, comments in the queued reports, and on the spreadsheet, the account numbers in question and the purpose. Again, the difference and the change. And there's our same variance that we were working on with payables. And if we continue forward over here, then we've got a number of accounts that we're balancing for inventory. So we're balancing inventory, we're balancing accrued inventory, inventory variance, which is a purchase variance, We have decided to track then from Do It Best direct ships. We get specifically some variable discounts and variable adders, and in consultation with the accountant and with all parties involved, we decided rather than try to land that back into the cost of the items, we're going to take that as a line item to the P&L, which seems to make sense and should make a much more efficient processing. Next to that, we've got the account number for PIP, and then so the sum of those accounts, if we scroll over and sum those accounts, we have a figure of 873, 133.85. And then if we look at our inventory value, which we're doing at average cost and including negatives, both of those things are important, we see that we're tracking a variance of $105.40, and you see that changes slightly the next day. This won't balance to the penny. We would expect AP, AR, accrued AP. As we go here further, we'll take care of sales tax liability. All of those things should balance to the penny. We've got that expectation. We also expect that accrued AP should balance to the penny to accrued inventory. This figure, for the variance between the general ledger inventory of those 5 accounts and the inventory as reported on RIV, we would expect some small variance just because of the dynamic nature of what's going on and the number of SKUs and the challenges in keeping up with it. But we would expect it to be relatively small. It'll be difficult to keep it at the same level, but that should be our goal, where we're in just literally less than $100 difference on nearly $900,000 worth of inventory, and that's just a fantastic result. So that's going to be our balancing process, and as we continue forward at a later date in June, or end of June, we'll make the adjustments and then keep balancing this. For the time being, we'll balance this daily. As we move forward in time, we can move to weekly or more periodically as we find that we've got things nailed down.